Hello, welcome everybody joining. Welcome. Put in the chat where you guys are from. I'm from St. Pete, Florida. Love to see where everybody is located. And there we go, California, Texas. All right, I'm gonna spotlight you, this is my first time doing. I Googled how to do it, thanks to Amy.
I actually can do it too if you want. You just are you want to do that or you want to pin us? What would you prefer? Spotlight's good.
Yeah, I've never done it, so whatever you prefer.
Are
I'm
we are we co-hosts?
um
Hi
I need a
everybody.
panel.
Do you see pin or just do you see spotlight when you click on the three dots in the upper right-hand corner?
Yep. So you have like a little pin and you both should be spotlighted now.
Perfect.
Does it change anything for you on your side?
I will look. Hold on.
Yeah, I see a pin.
Okay.
Can you get we have it up, so
I see the pin, so that should work.
yeah.
So we have Miami Beach, we have Sarasota, Bradenton, which is like an hour from me. Oklahoma City. Kimmy said, hi, Amy.
Kim, Oklahoma, yeah. Kim, am I going to see you next week in Arizona? I see someone from Emily from Springfield, Missouri. I was just there. I went to a wedding in Branson. That was interesting. I'm just going to say, being a New Englander, a New Yorker, but I loved it. People were so kind.
All right. So let's see. How are you both doing today? Excited?
Always excited. You know, it's kind of fun. I had to go get my hair done this morning, and she's an entrepreneur. She's 24, and we're going to go out to lunch because I was talking to her. I go, what are you doing for your business? Like she had no idea, Maeda, and now like she's super psyched. So it's like this knowledge is great for real estate because it gives me real estate clients. I go, you need to buy a house. She goes, yeah, I need a two-family. I go, okay, we're going to meet. So
I'm going to send you a copy of the profit book to give her. That would be good for her. Yeah. Madeline, make a note.
I put my phone on Do Not Disturb. So that's the beauty about knowing this information. You can help your clients too.
Yeah. Oh, definitely. Definitely.
Right. So I think we might have a few people join us, but I'll go ahead and intro
Perfect.
Amy Maeda.
It's Maeda.
Maeda. I
Not Tyler Perry. Yeah, I don't look like Tyler.
I'm sorry. I practiced and then I knew as soon as I was going to say it, I was going to mess it up.
It's the weirdest name. It's okay.
No, it's not. I love it.
But people don't see it, the AE the way it is. So it's good.
I love it.
Thank you.
So everybody, welcome. Happy Friday. I'm going to introduce the two powerhouse sisters. Usually Alex is here, but he is on vacation. So I get the pleasure of doing this VIP workshop with them. And they are changing the game when it comes to real estate and money. For those who don't know, they are sisters, which I just learned. And they have both navigated the path to retirement and built their lives with intention. The course, wait, a little bit. Amy contributes to the real estate community through her involvement with NAR, serving on committees such as, and let me know if I'm wrong, the data strategies and federal technology policy.
Data strategy. Yeah.
And she's also a member of the Women's Council of Realtors, correct?
Yes, ma'am.
Yes. And Amy has worked a lot with Alex Montalenti, and he asked her if she could please do our VIP master training, and she said she would love to. So we're very grateful for Amy and Maeda to be here and do this together. Maeda is a CPA by profession. She co-founded a successful business-focused CPA firm in California. And she's got decades of experience helping business owners manage and grow their wealth. Maeda brings practical, real-world financial insight to the real estate world. And in 2003, she teamed up with Amy, her sister, a well-known industry expert in real estate education and technology, to launch the Real Fiscal Fitness. What is your mission? Because I don't want to mess that up.
Our mission, it's to give real estate professionals the mindset and the brain power to know they can control their destiny. They don't have to be day workers. There are ways to simply change the way they're saving and doing business so they can retire, create generational wealth, and not have to work until they're 80. Basically, that's not a real mission, but that's what it is.
No, but it's so important, and that's why we're so thankful that you're here with us for this hour, and we appreciate you. And Amy, since you've worked with Alex, our CEO here at Real Grader, for those that don't know, and you've seen firsthand how we help agents elevate their online presence, would you mind sharing a quick testimonial with your experience working with Alex, the Real team?
Well, you know how this started. Can you hear me okay? We started talking because I told him how much I love your card and how it helps me, the Real Grader system. It helps me articulate my value because sometimes I'm not good at it. And we were just like, just having a lot of fun talking about the power of that. So that's why I agreed to be here today, because love his products. Love your products.
Thank you. All right. So I will be managing the chat if you have in the chat as they present, and you can go ahead and take over the show.
Fantastic. Everybody, Maeda and I are so glad you're here today. I'm still selling. I'm only doing 4 to 6 transactions a year because of my speaking and consulting, but I think it's important for me to keep on selling because I need to be in the game to talk to people that are in the game. Did a lot more when I was in my prime of my career, as you can imagine. You work really hard to earn your commissions, and the goal today is simple. We're going to show you how to not only keep more of what you earn, but also grow it. Now, financial conversations can be very overwhelming. There's a lot of confusing jargon, complicated ideas. That's not what today is about. I promise you, we're going to keep it simple, clear, and completely doable. So smart steps that you can start applying today, no matter where you are in your business journey. So let's dive in. We all already had wonderful introductions. I will just, Maeda, should I share my story here? Or should I wait till later?
You could share your story here. It's a good place to do it.
Okay. So about 15 years ago, my sister, CPA, called me and said, can you retire? Because, in 15 years, I will be in my early 60s and I should think about retiring. And I said, sure, I own 7 buildings. And she did her big sister eye roll and says, that's not going to work. So what she did over the next year is we created a business plan that I literally brought to a financial planner. She told me how to find a financial planner. We're going to share that with you today. I was mortified going to this guy. I maybe had $100,000 saved, but I had a lot of real estate. He was so kind. He helped me with my goals, create a portfolio of actual vehicles that save me on taxes like crazy and making me money. So instead of paying taxes, I was building wealth over the last 15 years and still do, and saving taxes. And he also helped me figure out my real estate. So today I can retire. That's awesome. And it was really based on what my sister did. And my sister's daughter bought a condo a couple of years ago, and she went out to lunch with this woman, and she couldn't believe this woman hadn't saved anything. So she goes, we've got to write the course for real estate professionals. So how'd I do, Maeda?
Just one little factoid. The woman that I took out to lunch was my daughter's realtor, and she's a top producer for a national brand, and she doesn't even have a house of her own.
Insane.
I was mortified about that. I mean, you're in the industry, right? Anyway, so we want to help you create a business life plan with you running your business rather than your business running you. I want you to ask yourself and really be honest. Am I running my business, or is my business running me? Ever feel like business takes over your life instead of fueling the life you want? You're not alone, and we're here today to help you flip that script. We start by getting really clear on the big picture, because if you don't know what you're aiming for, it's way too easy to get caught in the day-to-day and be busy instead of building wealth. So I want you to ask yourself, our goal is to help you keep more of the money you make. Here's a simple checklist to guide us in ensuring you have enough money to retire. 1, how much money do I need to live the life I want? 2, how many homes do I need to sell to reach that number realistically? And 3, how do I keep more of what I earn? instead of falling into the trap of just spending more when I make more. The mindset shift from busy to intentional is where everything starts.
And Maeda, you had me do that. I think it was 12,000. Now it's down to 10,000 a month. I figured out with my budget that I could live the life I want. I can still take money for vacations and do special things, but I needed that much to live. And I did it. So that's really important. Start thinking about your budget. How much, if you could, I hate this saying, but wave a magic wand, how much do you need each month to not feel stressed about money? So we have a roadmap. It's 6 steps. The roadmap takes us from a business plan to selecting a financial team of trusted advisors. What it is, it's setting up a business plan and budget, setting up your appropriate business entity structure. That's sole proprietor, LLC, S Corp. Choosing the right financial planner. That's big, because after today, guess who's listening to this class? Your phone. You're going to start getting all sorts of stuff. You might even get invitations in the mail to come to beautiful dinners to meet with financial planners. That's all well and good, but you need to know what questions to ask, and we're going to share that with you today. How do you set up an appropriate retirement plan? I'm talking traditional vehicles that people who are W-2 employees automatically get and still don't do well. How to set up investment structure with a diversified investment portfolio. We're going to share with you some of the things our students are doing now for passive income and some really out-of-the-box ideas. And then how do you put everything in place? And we have something called the Financial Navigator that can help you do that. So before we go too far, and if you could put the link to the handout in the chat for me, Katarina, we have this isn't our course or anything. We've actually written a course. We'll tell you about it later, but this is just a fun handout. And if you download it, you are giving us your email address, but that gives us the ability to invite you to one of our monthly deep dives. We're going to send you a list of all the topics that we talk about. You can pick if one floats your boat and come on it. We'd love to see you one month, all the different kinds of topics. So I'm going to, since it's already in the chat, I'm going to just let you click on that link, download the handout, and we will be also sending this with the follow-up. So take a picture of that slide if you want, or just click on the link in the chat and please download it. And of course, my attorney, nothing goes anywhere unless we show it to our attorneys. We want to remind you today that our information is for informational purposes only. We are not giving you legal, financial, or tax advice. We recommend that you consult with your own advisors when dealing with any of the issues that we talk about today. The link is clickable. Basically, it brings you to a place where you put your email in, and someone's saying the QR code's not working. That's not good. Let me just go back and make sure, because that should work. Make sure. Hang on. I want to make sure that it's working, guys.
It worked. Someone said it worked for me.
Yeah, it's working. But if you take that URL, when you click on it, it's going to say continue to destination on the bottom. So look at the bottom. It says continue to destination, because I don't pay for Bitly. It does marketing. So just click on the destination button at the bottom and it should work. Or just the URL. If you can put the URL back into the text box one more time, that would be lovely. And again, we're not going to spam you. We're not going to be emailing you, but I will email you once to be invited to one of our, you'll get the handout, and then we'll give you an opportunity to join one of our monthly deep dives. And of course, if you are interested in the course. So wonderful. So I did the legal, Maeda. So
okay, I'm ready to go.
Thank you. And I'm not saying your name right. Runa, I think. Runa Gunnars. If I said it right, let me know. Thank you. So let's start, Maeda. What is a financial roadmap?
So the financial roadmap is a clear plan that connects your business goals with your personal goals. It's built on your business plan, and it tells you how much you need to earn, what you need to invest, and how to structure your business for success.
Now, this was given to us by one of the financial planners we interviewed for our class. And actually in the class, we have links to professionals if you ever want to interview them. So this roadmap, think of it as an analogy of getting balance in your wealth creation plan. So there are road choices to consider when creating a wealth plan. So there's 4 roads: earnings, cash, real estate, and retirement. So it goes counterclockwise. counterclockwise.
So imagine you're standing in the middle of the crossroad here and you're eager to build your personal wealth. What's the first path you want to follow? The goal here is to increase your earnings so that you have consistent excess earnings over expenses, and you're going to travel the earnings road first. This will provide you the cash you will need to build personal wealth. We know there are challenges, lumpy income, variable expenses. Despite that, you need to increase your cash reserves. That might mean rethinking eating out or clothes shopping, driving your car for a couple more years, or like Amy said, figuring out how to get her budget to a specific amount. Excess cash increases your cash reserves. This gives you the ability to keep current with your tax liabilities, fund investment in your business and in your real estate portfolio. And later on down the line, we're going to recommend that you also set up a qualified retirement plan.
Okay, fantastic. So that's the first one, earnings. And you can be anywhere in your career. If you're younger in your career, you're really going to focus on that. For me, because I was 15 years out, I did a lot of these at once. But if you're newer in your business, it could be you're going to focus on the earnings and the cash part. But like I said, some of us on the call, because I know you're going to be able to do all of this at once.
And one of the things that we're really trying to do here to make a difference is take your business plan, which you all know and love, and put in the drawer at the end of the year. Make that a living document that you work on with your financial manager. This is where we're going.
Maeda, you're muted for some reason.
Am I muted now?
No, now you're good. That was weird.
Well, because my speaker, I tapped it. It went off. Anyway, do y'all get that part where we're trying to make sure we're dealing with the right phases? So when you have enough cash to pay business expenses and taxes, save up for a down payment, purchase a property, now you're ready to take a turn on the real estate road. And, everyone here believes in this for many reasons, but the most important, we think, is that you gained leverage exposure to an asset that's going to increase in value, but your cost is fixed because you have a fixed mortgage, right? And so that difference is the increase in value that's probably caused by inflation over years. So your cost to earn remains fixed. The value of the asset increases. And this is similar to what happens to investing in stocks. It's all pretty much the same type of thing.
Okay. So earnings, cash, you have to be at a place, like I said. So I was at a place where I knew what I needed to live on, and I made sure that money was safe, but then I had cash. What am I going to do with it? You can do a couple things. You can invest in real estate, or you can invest in financial vehicles. So we're going to just talk here is once you're on your way to developing, you can start your real estate portfolio, right? That gets you down retirement plan lane. You can keep more of your money by contributing also to a retirement plan. So you know what? You're giving a lot of money away to the IRS each year. I mean, you could end up owing 50% or more taxes if you're a high earner. If you have real estate, you have write-offs. And if you have a retirement account, you can pay yourself instead of paying taxes to the IRS. So even though the arrow, it's real estate is highlighted, but we're looking at retirement plans. So I apologize. We're really talking about the retirement plan right now, right, Maeda?
Yes, we are.
So there are limits, but if you find a financial planner, we're going to talk to you about how to find one. You can have retirement savings and real estate investing options, which means you can manage how much you pay in taxes. So there was, Maeda had talked to me when I was high earner and paying a ton of taxes. And so she talked to me about creating what we call, and we'll show it to you later, a personal 401k. So what that is it was a vehicle that I was able to put $2,500 a month in. I'm going to keep it simple, Maeda, for now. And then I could profit share at the end of the year. So let's just keep it simple. Even if I didn't profit share, I had $25,000 a year going into this account. What did that do? It cut my taxes by $20,000. So I wasn't taxed on $25,000 that I earned. And think about it. I want you to think about 15 years by 25. It created now an asset that I have that's building with my financial planner, and it saved me on taxes. Did I say that right, Maeda?
Yeah. And because Amy had a profit share component on her personal 401k, she could put even more in if she wanted to. And I think in this 1 year where you called me like December 7th about you have way too many taxes to pay, and we had to come up with this plan in 3 weeks, you were able to put in more than just the basic amount. You could put in the profit share amount, which is excess. And that at that year, it was up to $63,000 put away. So these plans are good if you have flexible, your earnings, go up and down. So you want a plan that you can put more in as your earnings are up and put less in as your earnings are down.
We're going to get into more detail with you. I just thought I'd kind of get you excited. I know it's a little out of place because we're not giving you the whole picture, but just know that there are vehicles that can save you on taxes, and you actually, the money that you would have sent to taxes, you're putting them in financial vehicles that now the financial planner can grow. I will share with you, last year, good financial planners did, it may not be that this year, but last year it was 28%. If you had $100,000 at the end of the year, you would have had $128,000. Think about it. Now, once you put your sights on retirement, one of the other factors is getting investments and assets to produce income. We're real estate professionals. We should own real estate, right? And there's so many different ways that we can. I'm going to show you some of the ways with interviews from agents all around the country that agents are creating passive. You know what? It's not everyone's good with working with renters, but there's other types of real estate that will help you on your taxes, and it'll create income, but it also creates passive income, which we need when we retire because we don't have pensions, right? We don't have that kind of stuff. We're not government workers.
Now, if you take a look at this chart, you can see all the arrows from cash, real estate, and retirement plan are pointing to earnings. That's because you flip the switch. You stop working and you need cash flow to come into your account to support the lifestyle that you want to live and enjoy for all the years of your hard work. So these assets are working hard for you over your career. Now they're generating income and producing cash flow for you from your real estate investments, your retirement distributions from your retirement plan, and if you had cash investments, income on those cash investments.
Someone just mentioned what's going on right now. No one should have FRNs in the bank. Also, you have made mention of bullion. I'm talking about bullion in a little bit. I'm going to say that some financial planners don't agree with you. Some do. That's why you have to find the person that fits with your personality, Rita, as you invest. And that's some of the things we're going to talk to you about. And Maeda, if you have a comment on that, you can, but let's keep on going. Rita had just mentioned that. So
yeah, okay.
If you want to mention, go ahead on the financial road. So this is what
this is our formula. Do you want to do it? Okay. No, our formula is to develop a business mindset, set up a business plan and budget, set up appropriate business entity structure, set up an appropriate retirement plan, and set up investment structure and diversified investment portfolio. And just one quick thing to Rita, we're not making investment advice because we're not licensed to do that, but that's why we're suggesting you guys work with financial managers who can do that. Anyway, this is a slide. You could take a picture of it if you want to keep yourself on track. It's a comprehensive plan that we've developed to create and preserve wealth. The first thing is to set up your business plan and budget. Realize the plan and budget will be revised at least annually, if not more frequently. And remember, plans are meant to be changed. Once the plan and budget are determined, you can determine the appropriate business structure. Meet with a financial advisor to help with managing and growing your assets. The financial advisor should be able to provide information on how to reach your retirement goal. Remember, when you work with a financial advisor, you will earn at least 15% more than if you did not.
Exactly.
Let's check in. Many of you probably have these in place, as Amy said. So if you have 2 or 3 of these in place, you're on the right track. You can reach your retirement goals. If you don't, we're here to help you get on the right track.
Thank you. And if anyone else is having trouble with the handout, put your email in the chat and I'll send it to you right after class, okay?
I wanted to see who in the chat if anybody is at step 1, 2, 3, even looked at that. I'm just curious. If you have, put it in the chat if you're at step 1, 2, 3, 4, 5, or none, just to get some participation where everybody's at on here would be Tim Teeps. Hi, Tim. Step 5.
Congratulations.
Just curious, but this is awesome. Thank you.
Fantastic. Love it. Okay. Let's keep on going if that's okay. Thank you for doing that. So Next is you don't have putting together your team. You don't have to do this alone. You probably already have a trusted circle, a CPA or a bookkeeper or both, an attorney for business and estate planning, a qualified financial planner, and mentors, lenders, and experts in your corner. This group is crucial. And once I created this group and told them why I wanted them to help me with my financial future, everything changed. I actually get more referral leads now from these people because I'm talking their language. I refer other business to them as well. I was mentioning earlier at the hairdresser, I just referred my financial planner another person. So it's a lot more connections, and it's important. Your financial planner is key. You need someone who can run different wealth scenarios for you. You want someone who can stress test your plan so it's ready for any market. This Venn diagram shows how your trusted advisors interact. Start with one and bring more on the team, and they will refer, you will refer. I started with an accountant, but really needed a financial planner to put my retirement plan and targets in place. So this is a really, really important. So let's talk about the most important one, Maeda, choosing the correct financial planner.
Without the financial planner, you're skunked. And it's really important. So one of the things is you want to make sure they're a CFP and that they're licensed. They have Series 7 and Series 9 licenses so they can make investments for you. There are people who are just CFPs, and then you have to go to another person to actually execute the decisions. I like it all in one. It's hard to find a good financial planner. I've had two with my current third one, who are the stellar gold star team. But, when I was just starting out, I couldn't get into the financial planner that had a high bar of entry. You want to be able to feel comfortable and relate to them. You want them to be continually connecting with you. You want them to be proactive with you, to update either quarterly or semi-annually what's going on.
Exactly.
You want people that aren't trying to sell you products all the time. That's not their job. Their job is to educate and guide you, to stress test the plan that you guys develop. And if you have a change in your life circumstances, help you make decisions about how to handle those changes. You might ask your dream team, as Amy just said, the trusted advisor mentor circle for referrals. That's a great source. Also, your CPA sees a lot of results from different financial advisors. And if they're not making any money, the CPA is going to tell you that they don't think that's a really good choice for you, even though they're in all your networking circles. So I definitely would do that. You can check on investor.gov to check out anyone's licensing, if there's any complaints against them, things like that. It's a good idea just to do your due diligence.
Maeda, I don't know if you remember, but you told me to talk to my accountant and ask them which financial planners are doing really well for your clients. And that's where I got my two referrals and went. So love that idea. In the handout that we sent you, we give you the specific questions to ask these people. And Maeda said something about being proactive. That's so important. And don't hire your parents' financial planner just because they're in the family. Do your own diligence to find someone you like. I'll give you an example. I sold a rental property this past year, and I had capital gains and all that craziness. I wasn't sure whether to pay off the mortgage. I talked to my financial planner. He stress tests my system. He goes, don't. He goes, it's 3% mortgage. And he explained to me how I'm still saving on taxes as having that mortgage. So I didn't pay it off. I wouldn't have known that, but I can call this guy. I got a guy. You got a guy or a woman. You need to have them call.
You know who gets fired? When financial planners should get fired? When a couple has a death, one of their partners dies, and they go. Usually, it's the wife goes to the husband's financial planner. That financial planner never sees that woman. That's the first thing she should fire and look for somebody else.
Exactly. Have somebody.
Okay.
So anyway, let us help you plan for the future. So the next thing we want to talk to you about is what we call a business plan. It's not the business plan that your normal. It has a lot of the pieces of the traditional business plans that we have now, right? But Maeda added some things with it. So I'm going to share that with you. And in it, we do this already, right? What's your gross commission? What's your referral income? What's your property management fees you put that in your plan. What do you need in your investments? What are the income projections? for the today and next 5 years? And what's your retirement date? How much do you think you're going to need? And that's what a financial planner can help you with. Once they know that, they're going to be able to tell you what you need to invest in, whether it's traditional investments like retirement accounts or alternative investments like real estate or businesses, right? And they will give you growth projections. So that is really, really exciting. And here's the thing. They will work with you if you have 100,000 or if you have 100 million. When I went to my financial planner the first time, he told me he's retired people at 125,000. I don't know, but he has. And he goes, he's retired people with 30 million and they run out of money. So it's really how you manage. You don't have to have a gazillion to make this work for you. So let's talk about the business plan. This is your budget, is your blueprint. So we're going to talk about 3 pieces that I'll share with you. It's a business budget and a personal budget. You need them separated. So I'm going to show you that. You need to you're tracking your income and expenses, which a lot of us aren't doing, and you have to do that. And you may want to consider, so my financial planner has a bookkeeper that I've hired, and it's very inexpensive because I'm already paying my financial planner. So I have a bookkeeper that works with me. But if you don't have that ability, you might want to get a bookkeeper. Even if you're a low income producer, what they can do is really help you. So Maeda, any comment on that before I show them the business plan?
No, but that's excellent advice.
Okay. So this is just a sample business plan. You'll notice we have professional development. We broke it down into, I see that Christine Parker raised your hand. What's going on, Christine? Did you want to write it, or if you could write it in the chat, that would be great. And then I can answer you. So the first thing is your direct expenses, right? Costs directly tied to making a sale, like marketing, and then there's overhead expenses like professional development, technology, your bookkeeper, your accountant, auto expenses, office supplies. So what we recommend, this is business expenses only. And what you do here is you do what it is monthly. And I just put a sample thing together. Yours might be a lot different than mine, but you need to know these numbers. The next is, Maeda, you talk about this. This is the personal, right?
Right. The next section is personal. And in the personal section, we have a section up on top where you can see example of personal expenses on a monthly basis. Then in the middle, you'll see we're multiplying it times 12 and we're annualizing it. Then we come up with your wealth goals. And this is a secret sauce. What do you want to spend this coming year? Vacation for family, putting money in a rainy day fund. If you define what it's going to be, it's more likely you will achieve your goal than if you just think about it and do not write it down. At the bottom of this section, we have added up the business expenses, personal expenses, and your wealth goals. And in this particular example, the target take home is $113,000, but we're not done yet. Next slide. Now, what we've done is we have an example of how you can compute taxes. So it's a little spreadsheet you can use. There's some input you need to put in by yourself, but it's very simple and straightforward. Oh, one more. And then the very last section is how to compute your gross commission income. And in this particular example, the total income required, including taxes, was about $144,000. That's your number, not $113,000. And when we computed the gross commission income, this is just the face of the whole spreadsheet. We based it on $500,000 value homes, 17 closings. And then we have all the other KPIs that Amy knows all about. I know nothing about that. So just want to know we've made it very complete.
So we have this available. I'm going to send a link to Katerina to send you all if anyone's interested. It is an Excel spreadsheet. Maeda, I want to tweak it a little bit before we send it out, so I'm not putting the link in the thing today. But I'll give it to Katerina to send out, if that's okay. Yeah. It's different than other business plans, but what's so cool about this, you can literally fill this out, bring this to a financial planner, and they will give you what, Maeda? They will give you your
personal wealth plan. And what that is, your personal wealth plan is going to be a series of options that you can discuss with them. And it will maybe be 5 different options for how you could retire. And what they do is they stress test those options. They want to see a stress test result of at least 95%. and then you're good to go and you can follow that plan.
I think
And
that,
then they're proactive with you during the year to make sure you stay on the plan.
I think the things that was really important with this, I'm just going to go back, was wealth goals. I never put wealth goals. And so, you know what? I know I'm keeping my car a couple more years because it's a Mercedes and it's nice, right? I'm keeping it. I'm not getting a new car because I'm going to put that money in my wealth goals, right? I do have a family vacation that I need to do, and that money's got to go. So you get the idea. You start like reprioritizing. I don't go and buy new clothes. I don't do retail therapy. My therapy is I want to have money to go on a vacation. And then, of course, the whole thing about the taxes. So many plans don't give you that. And you need to have that real number. So we will get you the business plan when I send you the handout. I'm sorry that you had some people had some real problems with it. Thank you for the emails. I'll get you that handout at the end of the class, but then we'll send it again with Katerina. So we're super excited that there's a lot of nice comments about the business plan. Thank you. Next.
Thank you. Okay, we're moving on.
So now we talked about, remember the plan, you have to create your trusted circle. We're not talking about today, because we only have a short time together, we're not talking about your business entity. That might be one of our deep dives you want to come to. We have a great attorney who talks about the difference between S Corp, sole proprietor, and LLC. But that's one piece that we're not covering today. But the next is appropriate retirement plan. You know, I remember back in the day, people had what they would say, we have a three-legged stool for retirement: Social Security, retirement plan, savings. Well, you know what? Since the last 15 years that I've been working on mine, that advice has gone the way of the dial phone and any other things that went away. So unless you're of a certain age, we don't know what Social Security and Medicare will be. So in retirement, medical expense coverage and fixed income streams are great to have. And you can create these from your retirement plan. A retirement plan is part of your investment portfolio. It's powerful. As I mentioned, it creates tax deductions and builds wealth. Think about it. I want you to do the math. 25,000. Some years I did put 63 in. I did about 4 or 5 years like that when it was crazy market. I want you to multiply 25,000 times 15, and then maybe add another 100,000. Think about that is gaining 28% interest a year right now on the way I've said.
Tax-free, compounded.
Exactly. So think about that. Now, traditional events we'll talk about also is they create cash flow in retirement. So how does that all work? There are things, you get dividends and you get other types of income that comes to you. So Maeda's going to share with you some real basic. We get a lot of questions. And again, we're only going to share a little bit on this. Come to this deep dive if you want to understand more about SEP and Simple and all the IRAs. Go for it, Maeda.
Okay. So basically, I'm excluding traditional IRAs and Roth IRAs from this conversation. One, because it's just a small amount to put away. We want you to be thinking about putting larger amounts away. And also Roth, IRA, or 401k are not tax deductible. We're looking at tax deductions. Okay. So 3 major options are the SEP-IRA, the Simple IRA, and the solo or personal 401k. The SEP-IRA is very popular with CPAs, financial planners. You could set it up. You could set it up on your extended due date of your return. That's why they like them. But the problem with the SEP-IRA is it's limited by the amount of income after you subtract your Social Security and Medicare taxes that you make. So if you have $75,000 of income, then the maximum you can put in is 25% or $18,750. With a Simple IRA, you can contribute $16,000 if you're under 50 and a catch up of $3,500 if you're over 50. So you could make $20,000. Let's say you don't need your income. You want to shelter all of your income because you have a partner who's bringing in a larger income. You could put all of that in a Simple IRA and it could grow for your family tax-free until you're ready to take it out. The solo 401k is another option. You can defer $23,000. And if you're over 50, put a catch-up in of $7,500. And these limits change every year. So you need to check with the IRS to see or talk to your tax preparer. The personal 401k, solo 401k has a profit sharing add-on to it. And that's what Amy and I have been talking about. So let's say you have a really boom year and let's say every year you put in $500, but you have a really boom year. This year, you could put in an additional amount up to 25% of your net income in your entity, which could be up to a total of $67,000 for both.
Amazing.
So we're looking at ways that you can get large amounts of money into these plans. They save you on tax. If you're a 50% effective tax rate, it's saving you 50% in tax, and they're flexible. So if all you can put in your solo 401k this year is $2,000, that's fine. You don't need to put in more.
I'm actually now, I've cut my income because I'm slowly retiring. I'm part-time, I'm half-time, right? What's half-time in real estate? 40 hours. Anyway, I'm not putting in 63, whatever it is anymore. I'm putting in less, but it's helping with my taxes. Runa asked, what if you're 67 years old, Maeda? It's the max here, correct?
Okay, so you can get that money out of, if you're 67 years old, you can start taking the money, you can start taking money out of these when you're 59 and a half. You have to start taking distributions by the time you're 73. So at 67, you can still contribute to all of these plans. Even you could, if you're still working when you're 75 and you're making a lot of money, you can still contribute to all of these plans because they're considered qualified plans. Okay. If you have a very traditional IRA after you're 65, you cannot contribute. So I hope that answers your question, Ruma.
So a couple of questions, Maeda. Let me just
and the 70, yeah.
Let me condense them here, Maeda. So all these plans are tax-free when you put the money in. However, you have to pay taxes when you get the money out, correct?
Right. And the strategy is, if you have a SEP-IRA, you can put 25% of your income in every year. The strategy is, let's say you're working, you flip the switch. And let's say you can, I don't want to use the word manipulate, but you can manage your income so you have let's say you have a low income year, okay? You may accelerate losses into you can accelerate real estate losses into your tax return, things like that. And you can create a low income year. The strategy then is to start converting these. You pay tax when you do it, but convert them into a Roth. So the strategy would be have a Roth now before you need it. Just stick $1,000 in because you need to have a Roth for 5 years before you can start taking the money out tax-free. And then as you have low income years, instead of putting money into these plans, start converting these plans into Roths.
Okay, so Maeda,
That's kind of it's a little bit complicated, but it would be a deep dive that we could talk later on.
And we teach this in the class. So just to kind of bring everybody together here, these are tax-free. And so now at the point where I am in my career and my Aruna, you have low income years and the taxable income's less. So you pay taxes, but it's not as bad as when you're having high income. Samia, I'm not sure I'm saying it. You can hold all three. The one we didn't talk about today is the Roth IRA, which a lot of people do when they're just starting out. We talk about all of that in the class and we have a deep dive on it. But what Maeda's saying, and it's not in the slides, you should also you can have all three of these if you want. You can also open a Roth IRA with as little as just have, a couple thousand, maybe have 6, 7. But now if you have it open, then you can start moving money into it. I'm sure you're seeing all over the internet, when should I convert my IRAs into my Roth? So all of that. And Maeda, if you could just answer that last question that you just put in the chat, and then we'll move on because I want to be mindful of everyone's time.
I wanted to say one more really quick thing. You can convert a SEP into a Roth IRA. It's based on, again, I would only do it when I have a low income year, because let's say you can generate a loss on negative taxable income on your tax return. Wow, I would convert as much because you have to pay tax on it. So you have a loss on your return. You convert your 401k and maybe you net it out to zero, and maybe you could put 25, 30,000 into a Roth. And then later on, when you want to take it out, it's tax-free. The last thing I wanted to say, someone asked, could you have all three? If you have a really big income, more than $250,000, there's another plan that we didn't list here, which is called a cash balance plan. If you're interested in something like that, I urge you to talk to your CPA and see if that would work for you. There's some reasons why it would be difficult, but it might be an option for you. Okay?
Again, we're giving you enough information that when you first of all, know that you hire the right financial planner, and then they should be educating you on this. But in our course, we make you positively dangerous because you understand more. You're not going in ignorant, and you're going to have a good conversation with financial planners and have them give you the right advice, like Maeda is saying. So Maeda, before we move on into non-traditional, we also want to share with you, Maeda, I'm just going to do this one if that's okay.
Yeah, that's fine.
We have a Slack
question to answer.
We have a Slack community. We started it last month. We already have 100 people in it. We post stuff there and all the time, and a lot of your questions today, we get them asked all the time in the group. If you're interested, and if you could kind of put the link in the chat, that would be amazing. It's called Show Me Real Money, and if she'll put the link in, fantastic. You can go and join our Slack. If you've never been in Slack, it might be a little bit different. Find someone who can help you, but we seem to have a lot of people in Slack community. So join our Slack. We'll send you that link as well. We have categories, and people are having conversations there all the time. It's really cool, and we keep it to financial. Last question, Maeda. Two last questions. Someone said, I have a SEP and Roth. Good for you. Amazing. Marie Jose. I'm not sorry I'm saying your name right. Gina said, when you say 250,000, is that before or after tax income, Maeda?
That is the amount of income you have in your net income in your business. So let's say you have 250,000, you'll be able to max out at that time. You'll be able to max out a personal 401k and a profit share plan at $67,000.
Is that before or after? Is that gross or net?
Okay, this is where we get into the real estate CPA issue. It's the net. It's your gross commission income less your business expenses. If that number is more than 250,000, you can max out the personal 401k and profit share plan to about $67,000 now. Right. If you have more than that, you want to really put big money away, like you want to put 250,000 away, talk to your CPA about a cash balance plan. Okay.
Thank you. Louisa said, with IRAs, we don't pay taxes now, it's just postponed. Did I understand?
Right.
Correct.
You get a tax deduction on your return, so you don't pay tax on the money you put into the IRA. It grows tax-free. And then when you're over 59 and a half, or whenever you want to take it, at least 73, you have to start taking the money out, and you're taxed on it then.
So that's these three, SEP, Simple, and Solo 401k. The one we didn't talk about today is the Roth, which is you pay the taxes. I don't know how to say it, Maeda. The Roth.
It's not tax deductible when you make the contribution.
Right. Okay.
So since you never get to deduct the money that you put in to the Roth from your tax return, when you take it out, it's tax-free.
And Suma asked if you can do all three. I think you already answered that one, correct?
Yeah, I think I did. And there's a limitation on how much you can deduct, Suma. That's why I was saying that you should choose the one that works for you best. But if you wanted to do all three because you want to shelter a lot of money, look at a cash balance plan. Okay.
Talk about that today. We tried to hone it in because we could talk for hours.
Well, you guys ask great questions. Not everyone is so
I'm super excited.
As smart as you guys are, I have to say. We should say that experience.
We're giving great information. After you are 73 and have an IRA, do you need to take out funds annually? Laurel, yes, and we can't tell you specifically. You have to talk to your financial planner. There's ways how to mitigate that, work around it. And all the big bill that just passed, the big beautiful bill, apparently it was called, there's new laws about that too. So that's why you need a financial planner, Laura, to help you. I'm going to be able to extend some of mine, which is really cool, because I'm still working. So you need to talk to a financial planner. But yes, traditionally, when you're 73, you have to start taking the funds out annually. Correct, Maeda?
Yeah, it's called a required minimum distribution.
Okay.
And I was just it's called a required minimum distribution. It's basically the IRS looks at the value of your account on December 31 of the prior year, and they divide it by your life expectancy. So if your life expectancy is 20 years, you divide that by 20, and that's how much you have to take out every year. You have to take it out. Okay.
Somebody else said is Roth. So Roth IRAs are tax-free on all the profits afterwards.
Yes. Yep. It's all tax. When you take it out, you pay no tax. And then somebody else, if I should move money from a SEP-IRA to a Roth IRA if I had a bad year.
Good question. Thank you, Marie.
Yes. If you have if you have a down year, and I never say bad year because we have up years and down years, we all do. It's a cycle of business, right? And sometimes you can manufacture a bad year. Like if you have real estate and you get to and your material participation and your real estate investment and you have a lot of depreciation on it, you're manufacturing a bad year, right? You create a loss. So if you have that, then those are the years when you should take, before the end of the year, you need to look at your IRA accounts or your 401k accounts, and you could convert those to a Roth. So what you have to do is have your financial advisor open up a Roth account for you. You have to physically move the money from the taxable, from the 401k or IRA to the Roth IRA, okay? And then you'll get a form from the IRS that says you did that. And then your tax preparer will pick that up as taxable income on your return. Perfect. So if you have losses from other things, it will shelter it and you won't have to pay much tax on it. That's when you should do it.
Marina, we're at 2 minutes of 2. I need about another 7 minutes. Is that okay?
Yep. Perfect.
Okay, great. Okay, non-traditional investments. Those are things that we're comfortable with that create cash flow. Rental properties, Airbnb, REITs, which are real estate investment trusts, fractional ownership in commercial properties, and passive commercial multifamily investments. That's all I'm going to really say today. We go into this deep in our course. We've interviewed amazing people who are killing it with all of these rental properties. We interviewed a guy in Ohio that went from 5 single families to over 100 units and how he did it. It's like so cool. Airbnbs, of course, are cash flow if you're in a market where you don't have laws impacting you against it, and you have the temperament to deal with that many renters. Commercial properties, there's many commercial properties now that are tokenized where you can get a piece. And I missed REITs. REITs are actually investment vehicles where all they do is invest in real estate, and that might be a safe place for you for passive. We talk all about that. And then last is passive commercial. These are syndicated buildings. People will buy maybe a $21 million apartment building that's maybe a C or B level, not A. And they because they're buying it for $21 million, they have to come up with the money. So they ask for investors, maybe like $2.1 million or a little bit more. People go in and then they hold your money from 3 to 5 years, and then you get it back after that. You have to be very careful with syndication. There's a lot of scams out there, but there's some amazing opportunities. So in particular, I have one building. I only have 100,000 in it. It generates 22% a year on my money. Amazing. But he's a good guy that does it. And we interview him in the class. So if you don't like picking up rentals and fixing toilets, there's other opportunities. There's REITs, there's fractional, and there's passive commercial. I'm sure there's others. So fractionals, Gina. So fractional is there. It could be apartment buildings. It could be commercial buildings where you can go in and be an owner. A good idea of like fractional. I don't know if you've heard of this, but you've probably heard of Picasa, where they sell second homes, and you might have an 1/8 share of that property. Now, in that case, you're buying it to use it. You're not actually renting it out per se. But let's say there's a commercial building in your area that's worth, there's one in my area right now that it's worth about $9 million. They raised a bunch of money. So the main part of the building is owned by the commercial owners, but other people bought in. They get money quarterly back on their investment with the fractional ownership. So that's hopefully that makes sense, Gina, and come to our deep dive on that if you want. And April said MO can be another profitable. Yes, Gina, like a dividend. Absolutely. MOBs can be another profitable investment. Gina, we're going to be sending you the link. We're going to send you the schedule of when they are, and you can register. MOBs, what's an MOB? You don't know what that is, April. I'm always liking to learn. I want to show you a couple of things. Medical, yes, absolutely. Medical office buildings are the same thing. They're commercial buildings. So the same thing, absolutely. Thank you, April. And there's a lot of those going on now. Oh my God, all the medical billing because of the aging of America. It's a great investment.
How about private surgeries that the doctors are putting together? That would be a great investment too.
Can do fractional on for commercial. You have to really learn about this stuff. And I'm going to say, be very careful on these, and we'll talk about those in the deep dives. Maeda said, why are you putting up here? But I want to just share this. We've taught this course. We did it live. We've taught it for hundreds of people before we put it on demand. And we brainstorm in the classes, and we're doing that in our Slack too. What do you do for money? So someone mentioned bullion. I have it here as coins a collector. These are other ways to create passive income. So brokers open up REITs for their companies. We'll talk about that. So that's a real estate investment trust. They do it just for their brokerage. Gas and oil options. Being a broker, we have an agent who lives on the border way down in Texas. The houses are really cheap. She holds the mortgages and gets these first-time home buyers into houses. She's an amazing woman. Turo car rental. We met an agent who makes $2,500 a month renting one of her cars out at the airport in Chicago. Airbnbs. Maybe you don't want to have a separate building. People are putting them over their garage. I personally don't want another person on my property, but people are doing that. Nonprofits, divorced widows to help them find a house. Crypto. I'm a big crypto person. We'll talk about that another day. Coins, collections, collectibles, and bullion, and wealth builders for clients. So there's a lot of great ways, and we'll even extend that. So bottom line, Maeda, do you want to just talk about next?
Yeah, so we developed this short presentation to illustrate how a financial roadmap can get you started to your retirement security. We have 3 goals: to get you thinking so you can put a plan in place. If you need more help, we've launched our step-by-step on-demand course. And if you think that would be helpful, you're going to be getting a link. You can register for it. And the course may be all you need, but these topics are meaty, as all these questions show. And so to get you the information you really need, we have set up a series of monthly live meetings. We are calling them deep dives, to provide more insight from us and through subject matter experts that we interview.
Exactly. So let's bring it home. Your next steps are clear. Save consistently, stay out of high interest debt, start investing early, and plan to flip the switch. And how do you do this? Hire or interview a financial planner. When you get the handout, which I'll send to you this afternoon, we have questions that you should ask a financial planner. Confirm a business entity with your CPA. Make sure you're in the right entity for your business. I started as a sole proprietor, went to LLC. I'm an S Corp now. It works for me. It may not work for you. You need to talk to somebody. Update a business plan. And if you want ours, we'll send you a link through Katarina. Schedule a meeting to align your business plan with your personal goals. And then when you meet with that financial planner, choose your traditional and non-traditional vehicles so you can have money growing for you, saving taxes, and creating passive income. So everything we share today can move you from busy to wealthy. So as we wrap up here, I'm going to put our things up on the screen again. We're going to send you this link. If anyone's interested in our course, I will let you know that the course has lifetime course access. We're going to be constantly updating it. For those of you who understand AI, we had a marketing guy take all of the hundreds of pages of our content, and we created our own GPT. So you can go into any of the AI tools like OpenAI, ChatGPT, whatever, all the different ones out there. And ours does not go out to the internet, get information. It's a closed because it's just our information. So if you took our class and then you go, wait a minute, how much do I need X? Or explain to me a SEP-IRA, our GPT gives you the answer. It's so cool. We have the community access through Slack. We do the live monthly webinars. And if you hate it, we'll give you your money back. So we'll send you the link. We'd love to see you in the class. We are starting our sales. You actually are pre-sales. We're launching next week. So if anyone wants to go in early, we would love that. And then last but not least, we'll send you that link. Last but not least, here's our information. If you want to reach out to us, we love helping people. We don't give our information to everybody, but I have deep respect for Alex and what he's created. We've been good business friends for a long time. So here's her information. Maeda sold her practice, so she is not.
I'm licensed in California, but I'm not licensed in Florida.
We do have people who are licensed in Florida, Marie, which we can
Yeah, we can give you referrals to CPAs in other states. Actually, CPAs we do federal taxes, and we don't need to be licensed in states to do taxes, but Florida doesn't really have a state income tax. But it's good to work with someone from your state because there's nuance of things that I wouldn't know. And I don't do tax returns anymore. So I just talk about it. Much more fun.
And I would be remiss if I didn't ask for referrals. I didn't see anyone from Connecticut on here today. If you have anyone wanting to move to lovely Connecticut, Hartford, Connecticut, one of the top places to move, send me and I'll give you a referral. So there's my information. So we'll send you all the links. Loved your comments. There was a woman who had her hand up quite a few times and I asked her to chat, but I didn't see it. But we are over time and we really appreciate you. Gina, we're going to send you an email with everything after. So you will get that from Katerina, and I will send the business plan directly to those of you today as well. So
thank you both for being here. Just so you know, he's on his vacation. It's supposed to be, but he texted me many times this morning to make sure that Amy, you were going to be taken care of and everything was smooth and okay for today. So he is missing being here, but I appreciate you both, Maeda and Amy, doing this, and I learned stuff. I'm not a realtor, but let me tell you, I want to retire, so I appreciate the information.
Wonderful. Yeah, he's actually
everybody.
He's in Russia, and my husband's Russian, and I've been lately. I can't believe he's there, so I gave him some ideas of things.
Good.
Like he didn't go into the subways, which are amazing in Moscow, and I told him something else. He went to the GUM. So anyway, I digress. Thanks, everybody. Really appreciate you.
Happy Friday. Have a good weekend.
Thank you, everybody. Bye-bye.
Bye.